Do you read me over?
Be advised, you are coming in weak and unreadable.
Say again, Comm Tower. This is Pacho. Do you read me over?
Pacho, this is Comm Tower. I read you Lima Charlie.
Comm Tower. Request permission to launch and commence the field op. Over.
Stand by. Pacho, permission granted. I say again, permission granted.
Roger that. Launching podcast in 3, 2. You are now entering the field op with your host, Pacho Correa, Chief Warrant Officer 3, United States Marine Corps retired. Get some. Hurrah! All right, get some. What's going on, everybody? Welcome back to me. Hey, look, I know we've been gone and we missed a couple of shows. As I mentioned to you folks earlier on previous posts, my daughter had to have some major shoulder surgery. So we don't stop parenting. We don't stop being parents. We just kind of pull back and stop parenting a little bit. So that's where I was at. So hopefully you can understand. And plus, there were some things that I needed to take care of as well on the personal side. So no, there's nothing against you. It's all on my side. But hey, thanks for understanding that, and I appreciate it. So welcome to the show where we break down the system that you served, and how to make how to make it work for you. So welcome to the field op, everybody. This show, we pretty much it's all me. You folks know that I am in the financial industry and I help folks out. I also kind of found myself helping veterans with their claims. So this public service announcement is a little bit of twofold. One, don't forget to apply for your VA benefits. If you need help doing that, you can hit me up. I've been more than glad to do it. I helped several veterans when I was in my travels and working outside of the state. And it's a great thing. So we're waiting on the VA already started contacting them. That's an amazing thing. So don't sell yourself short. And if you need help, you can pretty much hit me up on the show, and I'll be more than glad to walk you through the system. And then we can show you how to, once you start getting those proceeds from your claims and benefits, how to make that money grow properly so that you can actually have some for retirement and not find yourself greeting people at a Walmart. So take advantage of the VA of the PAC Act and some of the good things that the previous administration for the PAC Act have done, where you don't have to show any, it's on presumptive conditions. You don't have to show medical proof. So make the system work. So it's kind of like what the topic of the show is today. And hit me up at the show here. Again, the show is all done, by me, through me. And I'm the one who pretty much does everything on the back end. And another great announcement is that on May 24th at the Winchester Rodeo Grounds in Winchester, California, the Brotherhood of Marine Corps Riders, shout out to them. It was a group I used to be a part of when I lived in California, and I'm no longer there, but I still love and support. They're having a 21st annual bike rally and hot rod run. And there's an amazing bike. It's a really cool customized bike that you can win. So you can go to www.brotherhoodofmarinecorpsriders.com and get more information. Yes, you can win this bike even if you live out of state. That you on the previous rallies that I was part of as well. There were several people that won out of state, and we'll ship the bike to you at a low cost. Believe me, it's an amazing bike. It is worth a lot of money, and tickets are only $10. So again, you go to www.brotherhoodofmarinecorpsriders.com. You go to my Facebook page, and I just did a couple of posts where to go and everything. Or you can go to their Facebook page at Brotherhood of Marine Corps Riders on Facebook and get more information on how to win that amazing bike. So, and the proceeds help out the Semper in America's Fund, because they changed their name. They used to be the Semper Fi Fund, but all proceeds help that organization. That organization actually helps combat veterans who were injured and perished while in combat and in the last couple of year conflicts, as well as their families. It's an amazing organization. They've helped me out multiple times as well. They do a lot of great, cool things for service members. So you can win an amazing bike and at the same time help an amazing organization. So please check them out. And this show is also brought to you by the Great American Constitution, and and all the rights it brings. So freedom of speech, right to bear arms, all that cool stuff. Because I spent 21 years, just like some of my fellow service members, who served as well, defending the Constitution and the rights it brings to us as American citizens. So if you like what you hear, stick around. If not, hey, that's okay. Swipe left. Support Sitchradio.com and support a local podcaster with their show. Because again, we're just here as servants of the public, and we help out everything that we can. So with that being said, everybody, I think that's pretty much all the pleasantries. Shout out to all my listeners and everybody out there in Facebook and the interweb land. So with that being said, why don't we just talk about the show of what we're going to talk about today. So today's mission is basically we're going to demystify your life insurance and SBP, survivor benefit plans. So what are they? Basically, who they're for, and how they compare in private with some solutions in the private sector, like term life insurance and investing in your money wisely, so that it can grow better for you. Yes, and I'm talking even though you're a retiree and you've put in for the thrift savings plan, which that didn't come to fruition or was available to service members up until the late 90s, early 2000s. So because you've heard me say this before, nobody here is going to get rich on a 401k unless you're the CEO of a major corporation. You're that guy way up at the top, and your annual income is 300,000 or something crazy like that. Then maybe so, but 401ks and those type of things were designed for. And it helps, but at the on the back end, it is the employer who provides these benefits, the ones who basically are the ones who get the tax IRAs breaks by offering these benefits. And we can have an entire show about that. And so we'll talk about it a little bit more. So the basics of SGLI, VGLI, and SBP. So single group service members group life insurance, SGLI, is something that we get when immediately as we go into the service. It used to be 400,000 when I first came in. Over the years, it's grown to 500,000 in coverage, basically for active duty members. So you come in, you pay it. It's very minimal. It's cheap, and it's automatic while you're in uniform. So it costs $30. It's $30 a month plus a $1 for any traumatic injuries. So you're just paying $31 a month, and you're getting 500,000 in benefits dollars to your family. And the other thing is that, but it ends shortly right after you separate from the service. So you have choices. However, a lot of us don't understand, what are our benefits, even if we're going through TRS classes, that transition service member classes that are offered at Camp Pendleton or any other military installation. The only thing that that we pretty much know about is VGLI, which is Veterans Group Life Insurance option. It's an option to continue your coverage after you separate. You have about 100, I believe it's 90 to 180 days for you to convert your SGLI into VGLI, or depending on what your medical conditions, if you're injured while in service, you can SGLI will cover you up to 2 years post-service, but you got to request that and apply for that. And there's some parameters that you gotta meet. And there's no medical underwriting if you apply within 240 days of separation. What does that mean? Is that again, I'm in the industry. I do this for a living now. So what it means is that we're all everybody's anything that insurance wise, car, health, life, what the company is covering is a risk. So what a lot of companies do is they request that you do a medical evaluation. Okay, so within the 240 days after you get out, there's no medical evaluation. It just you are automatically accepted into VGLI and you start paying into that. Okay. But it gets more expensive as you age. Every 5 years, as you get older, because all insurance companies will rate you at your current age. Depends on, and then we'll talk about what type of insurance you can get and what it does, but they'll rate you at your current age. So if I'm 51 years old, and when I get if I was to apply for insurance, they will rate me at my age. So obviously, the older you are, the more you're going to pay. I mean, that is the reality of things. Now, if you're healthier, then you pay less. But if you have some things, which some companies do cover your previous underlying conditions, so on and so forth, that's okay too. However, you will be paying more. Okay, I mean that's just the name of the game. So those are some things to consider. So SBP is kind of like, I mean, VGLI is kind of like your old barracks kind of roommate. Reliable at first, but then expensive and clingy as kind of time goes on. You know what I'm saying? Like, hey, where were you? What were you doing? Because sometimes our roommates becomes our military wives, so to speak. You take care of each other and things like that. So again, you want to consider those. So you want to do it. If you're retiring from the service, I highly recommend that you, as you start applying for or even while you're in service, you should look at your options of having something different, because the pros and cons of having, SGLI and VGLI group life insurance as a whole comes with a lot of red tape. It's based on the group and how much people have put into it. The company that covers VGLI and SGLI is actually Prudential, okay? Because I've done a lot of policies for service members. Prudential don't want to cover it. Again, group life insurance, even in the civilian side, benefits insurance. It's group life. So if the person died, if it wasn't on a stampede, not the country bar in Temecula, for those of you that know what I'm talking about. But if you're in a stampede, upside down with your hands up in the air, whatever, if you don't meet those parameters, the company will deny or they're going to contest the claim. That happens a lot with group life insurance. So some options to think about. And then survivor benefit plan, it's kind of like it's a pension-based plan. It's income protection, right, for surviving spouses. So what if you die, it basically, once you retire, for my fellow retirees, it costs about 6.5% of your retire pay. And then pays 55% of your retirement to your spouse if and when you pass away. Okay, this is a forever deduct. One thing you got to remember is that this is a forever deduction. Keyword forever. Okay, until your death. Then your wife or your spouse get the proceeds of you. So in other words, you got to put into it 30 units or 30 years. You can find all this information out on the DFAST website. If you want to fact check me, you go. You got to pay into it 30 years, so your spouse will get. It's essentially it is an annuity. And if you have questions about what an annuity is, please get with me after the show, because I can do an entire show on annuities and what it does. But basically, and the same thing, your thrift savings plan is an annuity. So, but pretty much all DOD retirement plans, as well as state retirement plans for teachers, police officers, firefighters, there's some form of an annuity or qualified retirement plan that you're kind of put into it, and in exchange to protect, if aside from survivor benefit plan, TSP, and also you're basically exchanging some type of retirement monies for retirement. Okay. With SBP, the only difference is that if you die, if you pass away, you put into it 30 years, whatever. Now your wife is getting that 55% payment. If your wife dies 1, 2, 2, or your spouse dies 1 to 2, 3 years later, all that money that you put into it dies with her. That is it. Your family doesn't get it unless you have incapacitated children who are above the age of 26. So, and you can name those when you retire on that paperwork. If you don't want that, SBP usually costs. It averages. It used to be $180. It's gone up to last time I checked about $250 of your retired paycheck you put into it. So if you do the math, if you for 30 years multiply to 280 times 12, that's 12 months. And then those 12 months you multiply by 30, that will give you how much you're going to put into it into that program. Okay, and we'll talk. I'm getting a little bit ahead of myself, but I don't want to. In my opinion, it's not the best. But again, I'm not giving you financial advice. I would consider different options to multiply your money, and which this leads me to, it's kind of like SBP is kind of only like a timeshare. You keep paying and paying and paying, but someone else is going to get the the proceeds once you're gone. I mean, so term life insurance. So let me tell you a little bit about. Let me just break down some of the costs. Okay, so VGLI premiums increase every 5 years by a lot, and then when you get in your 60s, I mean, it completely shoots. So wouldn't it be better to just have something fixed that it's just one price for the many years, or 15, 10, 20, 25, whatever the case may be, something that you just keeps steadily paying on. And again, survival benefit plan is a lifetime commitment, and could cost you over $100,000 during your retirement, and where that money could have grown at a much better rate. I'm telling you, because I do this for a living. I play with numbers. So the limitations, VGLI, you're paying into it, and every 5 years that money keeps going. That payment or premium, as what it's called, that it keeps going up. Okay. It's not steadily fixed. So if it were fixed, and by the way, if you want to fact check me too, you could go to the VA website, and you can find out about VGLI, because it's kind of like through the VA. You go to the VA website, and you can see the premiums based on your age and how drastically it goes up when you're in your 60s. It is not worth it, folks. I'm not talking bad about it. Again, it's a good product if you got a lot of underlying medical conditions that will make you uninsurable. Then at that point, I would say yes, but explore some options out there, that may meet that need of insurance. And by the way, too, folks, as we get older, you don't need, and then if you're growing your retirements and investing correctly on the back end, you don't need that much money for that much insurance worth, unless you're a high net worth, powerful individual, and you got people depending on you. Because when you get older, you don't have any children who have needs, or who are basically disabled, or so you just want, something happens to me, my wife, this will pay off the rest of the mortgage if there's $100,000 left, and she'll have another $100,000 to sustain her for a couple of years as she gets on. So that's the way you should see it. And, you don't want to make it somebody else. You don't want to create waiters. In other words, people waiting for you to die so they could get rich off of you. So again, if you have any questions, by all means, you can hit me up. This is not a sales pitch. I'm just saying that, I will be more than glad to give you the straight scoop, and what you do with the info is there as well. So, and then SBP is tied up to your pension, and your spouse gets only a portion, not the full check. Okay. And again, if she passes away a few years after you, all that money that you put into it, bye-bye, is gone. Basically, the government has got it. They took it. Okay. So let's talk a little bit about other options like term life insurance, and which is one of my favorites, and one of the things that I only deal with term life insurance. I know there may be some folks, so some fellow vets who deal with other stuff, or who are in the industry. Nothing against it. However, it's more cost effective. So again, fixed rate. So you get 20, 30, 40 years, 15 or 10, whatever the case may be. You choose your own beneficiary and the coverage amount, and the payments are fixed. Okay, so they're fixed. So for the next 20 years, you're paying $30 or $50 for $200,000 coverage. I mean, that payment, that premium, is not going to change for the next 20 years of the term of that policy. Okay, so a good example I have over here that I wrote down is, if you got $500,000 coverage, you could be spending $30 a month in your 30s. Actually, I did a quote for somebody who is in their 30s for $500,000. I think they're paying $70. I mean, which is, and that policy was 30 years long. So that means that when this 30-year-old individual, all the way up to their 60s, they are covered, and they're only paying $30 a month. And if you want to invest, then you could grab, whatever extra money that you have, throw in a mutual fund where you're going to get between 8 to 12% rate of return. And that money, and using compound interest, that money is going to grow beautifully. And you would actually have a good pot of money at the end of the rainbow. Okay. So, one thing that I've always preached is buy term and invest the rest. So you use the money you spend, like that you would spend on VGLI or survivor benefit plan, for example, to contribute into a Roth IRA or a mutual fund. Actually, a Roth IRA is the vehicle. Inside that vehicle is it's a mutual fund, because although you can go to the VA website, not the VA, the IRS website, and do some of these things. If you don't know how to do some of these things, fund the vehicle yourself, I'll be glad to help you out. Again, not a sales pitch, but I mean, this is what I do for a living. I am licensed all across the U.S., and I'll be more than glad to show you and help you. And then invest that money correctly, in things that will yield you a nice rate of return, that over the 20, 30 years, you could build a much larger nest egg. Now, I know a lot of fellow vets, because again, I was, for the last couple of months that I've been, out of traveling and working in other states, and I've been showing veterans how they can diversify their portfolio, because you can use TSP, Thrift Savings Plan, and put that money in there, and split it in the different types of fund, the L fund, the I fund, and the 20/40, the 50/40, whatever you have inside there. You want to have control of your money and have something outside, like a nice Roth IRA. A Roth meaning that the money will grow essentially tax free, and you can also dip into those funds and really have control of your money. That if you ever need to use it in an emergency, you can liquidate that money without having to go through the red tape or whatever, dip it into your TSP or your 401k if you are a civilian. So, for example, if you invest $250 a month into a mutual fund that's giving you around 10% rate of return, it could grow over to around $200,000 or thereabouts in 20 years. I mean, that is $250. That is that's pretty much nothing. I mean, it is some monies, but if you do it on an automatic payment, you won't miss that money. If you're a young PFC, a young troop that just came into the service, and if you do at 18, 19, 20 years old, $25 a month, by the time you get to be my age, that account will have drastically grown just with $25. Now imagine doing $100, $200 for that amount, that when you get to be, whenever it is that you want to retire, where you're, whether in your 50s, 60s, whatever, that account is there'll be a nice pot of money. You'll be extremely happy with your future, with your younger self. The future you will be happier with your younger self, because you sacrificed a little bit. And again, when it comes to investing, folks, it is a marathon. This is not a sprint. Nothing absolutely gets done on a sprint unless you're very risky and you're a day trader and you got your license and all that stuff, which I don't recommend. Just being the average Joe, investing and all that stuff. So let's talk about some of the pros and cons of. Let's do a little bit of comparison. Okay, SGLI is cheap while active. The cons is that it ends at separation. VGLI, no medical exams early. It does get on the con side. It becomes very, very expensive. Survivor benefit plan is guaranteed. It does guarantee. Again, you're giving up something for a guarantee. Guaranteed spousal income on the con side. It's expensive and very limited. It's very limited on payout. There's a lot more better vehicles out there that you can spend your money on. And I'm finding a lot of veterans, a lot of fellow retiree Marines and Army, they're opting for other options. So the key, again, folks, the key is that you want to invest that money. If you're not going to spend, if you're not going to put it on the survivor benefit plan, the key is whatever it is that you would have been investing is putting that money in something else that's going to yield you a much better rate of return. If you don't do anything with it, you just you just shot yourself in the foot, so to speak. Okay. Term life is customizable and very affordable. Some people say, well, there's no payout at term. Yeah, but it's like paying health insurance medical insurance, I mean, at the end of the year, nobody gives you anything because it's affordable, very affordable. You pay less, but you get a ton of coverage. Okay. And then the term and investing, well, flexibility, higher rate of returns. And the con is requires discipline, but it's very easy because if you work with somebody, I guess like me, that will be coaching you along the way. And once you start seeing your accounts growing, it's like, oh, who would not want to invest? Okay. And by the way, the maximum investment that you can do under the age of 50 on a Roth IRA is $7,000. Again, you can do compound. And then once you get 50 and above, an additional 1,000, and that money, now you can really retire when you want to, and not find yourself in your late 60s, 70s greeting people at Walmart because, again, people are living longer and outliving their retirements as well. So again, ideally you want to enjoy your twilight years, right? So what is right for you? What's the question here? What makes sense? Well, SGLI is obviously a no-brainer. While on active duty, I would throat punch you myself if you or a gunny may haze you and amaze you by doing that, because the last thing, God forbid something were to happen while you're in a training evolution, as we're drawing down these deployments and such, or while you're on a deployment, something happens to you, now your family are the ones who are basically financially suffering because you were too irresponsible, or you canceled it. Okay. And VGLI may be a short-term bridge if you're uninsurable due to health reasons. So, that might be something that, for you to consider. Again, there are options out there and other companies that will provide. If you have any questions, I'll be more than glad to, give you some answers and point you in the right direction. So what about term and investing? Well, if you're healthy and want to maximize your wealth to your family, do it. And if you want to leave them more than just your pension. One thing that I am seeing a lot is that because people are living longer, that pension is really not meeting their needs financially. And by the way, if you're if anybody tells you that as you get older you spend less, that is rather from the truth. Luckily, those of us who are retiring from the service, we are lucky enough that we get TRICARE and medical as well. But premium costs have gone up over the last two years. When I first retired, I was paying $10 in premium. It's gone up to $38 now in premium, and there's some additional costs that come out of pocket. So, and if you're if you're in the VA system and you're not 100%, now you're looking at out-of-pocket costs. So as we get older, there are medical costs, and we are going to, God forbid, hopefully not, but there's some costs that you may have to incur medically, and that drastically eats away at your monies as you're getting older. So, you wanna be in control, and basically control the strategy. Okay, you don't want the government to control it. You don't want to put your hands at the government. Okay, and who knows if Social Security will even exist by the time I'm in my 60s. So because that there's a lot of things changing, and it's just unfortunately over the last couple of years, it's already. Numbers don't lie. You're putting into a system that you're paying into a system that you hope that it is there right now. That system that you're paying into currently through your job or whatever is funding the people who are retired now. Think about that for a second. So in order for you to raise Social Security, you have to have put into the system for 10 consecutive quarters. Okay, there's 4 quarters in a year. So for 40 quarters, 10 years, you had to have put into the system consecutively. In other words, so at the end, at least 10 quarters. So that way you have something for Social Security down the road. So you want to think about that. So what it gets a little tricky if you were a 1099 employee and you didn't have some. So if you're a 1099 employee, I know a lot of people. I'm a 1099 employee. If you have an accountant, you try to write off a lot of things because you're self-employed and you want to retain more money instead of paying it out. Obviously you're going to pay taxes. You're going to owe taxes on certain. You got to pay taxes. There's no way around it. However, so if you're a 1099 employee, I highly recommend that you have something on the side, build yourself a retirement. And there are a lot of plans out there, like a simplified employee plan, a SEP. They call them a SEP, or there's also a simple plan as well that you can build aside so you have something in retirement. Unless you are, a retired service member that already has some type of income coming in, and that and then you want to have something, that you want to build another pot on the side. I highly recommend. But if you did 4 years, 5, 8 years, whatever it is, you didn't retire, obviously you want to do something about that. Okay. So because you protected your family while you were in uniform, so now it's time for you to protect them, with smart, intentional financial choices. Okay. You don't want, as we get older, when we're younger, we can make financial mistakes and we can recover some way because time is still on our side. But as we get older, time becomes our most valuable form of currency. So and the window to recover is not that bad. It's never too late to start investing and putting money aside. However, the time frame from when you're going to use that money, down the road, the growth of it is going to be limited, if that makes sense. Okay. So if you want help reviewing your options, you can reach out. You can reach out to me right here. I specialize in veterans, not only in veterans claims and benefits, but also in their needs. So just don't leave your stuff to chance, folks, because again, the ones that are going to end up paying the price are your loved ones. Okay. So I think this is a pretty good place to index. Really good show. If you have any questions or anything, shoot them on the comments. Shoot them on the show, and we'll be more than glad to answer them. Okay. So with that being said, that's it for today. Stay protected, stay empowered, and we'll see you next time on the field. All right. So index, isomas, daisuki. I'll see you everybody on the flip side. Bye bye.